A very good morning to all my dear students. Good morning, Muhammad Ali, Ajita, Surbhi. Good morning, Surbhi, Saurav, Manisha. Ajita, you will be able to see the class second presentation today itself. Thank you, Jaspreet. Good morning, Harshita, Chandan, Harshika, Dhairya Verma, Shiv Tripathi, Dhruv Agarwal, as well as Dhruv Khandelwal. Good morning, children. Good morning. Mayur, Hira, Milan, Shibha, Ankit. So I hope all my good children have revised their content that we have done in the previous lecture. And in case you have any doubts, we will be taking up those doubts as well. And today we are going to complete the second unit, that is relationship between partners. We have already done half the chapter. So today we'll be covering the balance of the chapter. Secondly, today we'll try to take up the very important, like in Sale of Goods Act, we have done few question papers, the suggested answers, which has come in November 21 exam. November 21, you're already, yes, the November 21 exams in the previous year 2020 papers. We'll try to discuss the partnership questions from those examination question papers as well. Like last time we did a case study, I told you how you have to write your answer in 3 different paragraphs. So today we'll try to take up those kind of questions directly from your question paper as well. Yes, definitely today we are going to discuss minor as a partner as well, those who are writing about that. So I hope you are excited and enthusiastic for today's class as you have always been. Good morning, Dipanshi, Abhinav, Aryan, Namrata, Nafisa. Nafisa, your section 22 we'll be talking about today. I hope you have read it in the study material. You have to read your section 19 along with section 22. So I still remember Nafisa was mentioning about section 22 last time. So it is simply talking about your mutual agency relationship. That is, your actions bind the firm. So child, when you read section 19, I hope you have read the entire implied authority restriction. So beyond that, 2-liner is given, which says that your actions bind the firm, which totally talks about your mutual agency relationship. Good morning, Sumit, Lakshmi, Chandan, Sneha, Milan, Ganga, few new names we have today. Sarvesh, Pooja, Jayanti, Simran, Vidhi, Jyoti, Mansi, all of you. Good morning, children. So Vanshika is asking, agreement in restraint of trade explain kar dijiye module mein se. So definitely we will be taking up that as well. In fact, we have a very important question to be taken up from the examination, Vanshika, on the same topic. So we will be talking about that as well. Duty to indemnify wali last line nahi samajh aayi. Again, Vanshika Gupta is writing. So duty to indemnify means if anyone has suffered a loss because of your fault, you need to compensate. Children, indemnify simply means to compensate. All right. Nafisa, I hope you just heard. I just talked about section 22 right now. So bona fide means in good faith. Children who are asking the meaning of bona fide means in good faith. That means something I am doing in, good opinion or in on the basis of a trust and good relationships. I'm not trying to cheat anyone. Say, for example, today we'll be discussing about a very important topic, that is expulsion of a partner. So expulsion is a very harsh term. Like I'm just trying to throw away a partner from my firm. So you cannot simply expel anyone. You can only do it if it is in good faith. If it is bona fide, means it is in the benefit of the partnership firm, then only it can be done. So Ms. Bhumika has a query for us. Partner does not do any transaction, another is ignorant of the transaction. If loss occurs. So Bhumika, simply you have to remember in the rights and duties of the partner that if any one of the partner is incurring any, if he has incurred any expenditure for the benefits of the firm, the other partners need to compensate him. So whether the other partner was a third party, they need to pay to the third party where you're asking, your question is actually not very clear. You have written too much information. You're saying if one partner does not any transaction, another is ignorant, what happened if the loss is occurring? So just be specific. Otherwise, what I understood from your question is that you're asking how do we need to compensate? So if any partner has done, say, for example, I told you children, for example, a fire occurred in the firm. So one of the partner, Mr. A, just jumped into the fire and tried to save all the files. He quickly called the fire extinguishers guys and incurred few expenditure for the benefits of the firm because it's your firm, you're trying to save it from the fire. Now, later on, when they had a meeting, they said that Mr. B and C must compensate Mr. A for all the, sacrifices and expenditures that he has done in order to save our own firm. So that is what is the meaning of indemnifying, means compensating for the losses. Okay. Ostensible, Milan Oja is asking the meaning of ostensible. It means an active partner. I told you in the literal meaning of ostensible means to show off. So when we said that the active partner, I showed you that slide who was, demonstrating and giving presentations in the meeting. So he's trying to do a show off that I'm always active. I'm always being highlighted. That means we are just trying to highlight the word active partner, means he's a kind of an ostensible partner, means he's always showed off in the meetings. He's always present in all the management decisions and all the other things. Dipanshi, right to indemnify and right to indemnify, it simply means when you have incurred any loss, I need to compensate, the firm needs to compensate. If firm has suffered because of you, then you need to pay back. So when we talked about the personal profits, where we were discussing that if you have earned any hidden secret profits, you need to pay back to the firm. All right. So I'm glad, children, you have revised the context today. Thank you, Nafisa. Thank you, Pushpa. Pushpa, conferred means when we are trying to conclude something. So you have to read the sentence completely. So that is how you analyze the words. Somebody was asking the meaning of another unanimous consent. So unanimous consent means consent of all the partners. Together you have to give the consent. All right. Okay, somebody is asking about section 23. Dhairya Verma is saying, what about the wrongful acts of the partners? That is again your topic of liability. So Bhumika and Dhairya, once we go into the study material, let me just start with the topics. And when I go to the study material, we'll once again talk about section 23 and 27 as well. Mohammed Ahmed, you need to understand the difference between partnership at will. Again, when I talk about retirement of partners today, I will be explaining the term again. So partnership at will means you and me form the partnership for a certain fixed period. So after the fixed period expired, the partnership comes to an end. But since we had a very good relationship, we were doing the business at a very good scale, and we thought that let's continue with this partnership. So now when we decided to continue with the partnership, we remained silent about the determination of the period. We did not decide that, okay, for 5 years or 6 years or for 2 years or maybe for 2 days. So when we are silent about the determination of the period, we're not saying anything. We're just entering into the partnership without fixing a fixed period for that. That means it is at our own will. It is as per our own choice. If we want to close the partnership, we can close it by the afternoon only. If we want to continue from, say, 15 years, 20 years, and then we want to wind up. So it is totally as per your choice. So general partnership, again, we are just trying to differentiate the general partnership from the particular partnership. So if you have attended my lecture on the first unit, I have made you write down in the notes that on the basis of duration, you have fixed partnership as well as partnership at will. One in which your period is fixed, partnership at will, no period is fixed. Khatam. On the basis of liability, instead of 2, let's take 3 types of partnership. General, full-fledged section 4 partnership, unlimited liability. The second, particular partnership, your liability is limited to that particular activities for which you have formed the partnership. Third is your latest concept, limited liability partnership, which you all will be understanding and studying in the coming week, wherein we try to restrict the liability of the partners to a limited extent. So that is how you all have to remember the general partnership. All right, children, we have lots and lots to cover today. So never mind, I'll keep taking up your queries in between as well. Definitely, Namrata, we'll cover section 17 also. Oh, wow. Abdul says we are ostensible students. Yes, you are, because you are really participating in the discussions and you pay attention to what teachers have told you and you revise your context. So that's very well. You are active partners with me in the partnership. Does A have to prove the third party was aware of the restriction? So Dipanshi, that is specifically related to the case you're asking about the extension of the implied authority. So we just discussed the other day where by mutual agreement, any restriction has been imposed for the implied authority. So the simple rule was, if third party is not aware of the restriction, third party ko nahi pata that you have done this kind of restriction, then the third party can claim the money from the firm. If the third party is aware of the restriction and he's intentionally trying to do wrong acts with you, then I'm sorry, the third party cannot claim the money from the firm. All right. So I hope this point is clear to you now. All right. Now let's go into the topic. Section 20, we have already done. So we were to start from section 29, and all those who are still wondering and asking the queries related to section 11, somewhere you're sailing between. So children, please remember section 9, 10, 11, 12 are the basic section talking about the general rights and duties. So somebody is still sailing between section 11. So section 11 generally talks about what are your rights and duties, how you are related between the partners. So I told you your duties to act diligently, to keep the books of accounts very nicely, safely. So all those were the duties towards the partners. And after that, section 19 onwards, we understand how our relation happens with the outside world. That is how we deal with the third parties. Okay. Yes, Shivam Chaudhary, definitely all the PPTs will be uploaded on the portal. It's already been uploaded. All the sale of goods PPTs are there. Unit 1 of partnership is already there. Unit 2 we'll be completing today, and then it will also be visible on the portal. Okay. All right. Now let's continue, children. Otherwise, we'll just keep sinking between the queries only. Mayur, right to access the books means the partners should be given the right to check out the books of accounts. You don't have to inspect, you don't have to audit the books, but yes, the right should be given that you can go through the books of accounts. You have full right to see how the accounts of the office are being maintained. Now let's talk about a very important topic. You can mark it important as well. This is also known as, the last two lines are also known as sub-partnership. So I want all of you to listen carefully, children, because this is one topic with which you come up with the queries also later on. But I can promise you, if you'll pay attention right now, then there won't be much queries. So when you're doing the topic, always try to be with the teachers. When they're talking about a certain thing, pay attention. All those who have been asking about 23, 24, 25, 26, we'll once again, when we go back to the study material, we'll understand those sections as well. But right now, what is your priority? To pay attention towards section 29. Otherwise, it will also become a query for you. So let us understand point by point, what is it trying to say? So number 1 point, it says, introduction of a new partner results into change in the constitution or name of the firm. Hence, consent of all the partners is mandatory. Now, first of all, it is talking about the case of admission of a partner. So I told you, if any new partner has to join my firm, I need the consent of all the partners. So what you were asking me, the meaning of unanimous consent. Here, unanimous consent is required. That means if I have 3 partners in my firm, A, B, and C, can I make D a partner in my firm without asking C? Is it possible? Law says no, you have to take the consent from A, B, and C. All the partners should agree that, okay, fine, we are happy that D is becoming a partner with us. So number 1 point of section 29, it says, whenever a new partner is introduced, it results in the change in the name of the constitution of the firm. Therefore, all of the partners' consent is compulsory. What is the meaning of consent? All the partners must agree. All the partners must agree that, okay, fine, you're joining the firm, it's okay with us. Point number 2 says, failure to obtain such consent may demand for dissolution of the firm. Say, for example, this A and B said, okay, D is a very close friend of mine, let's make him join the organization. And they did not took the consent of C. C was really not happy with this decision. Now, this Mr. C can go to the court and he can demand for the dissolution of the firm. What is the meaning of dissolution? We have full-fledged chapter number 3 coming up in the next session on dissolution. As of now, we simply understand dissolution means for winding up the firm, for ending the firm, for closing the firm. So as of now, simply you can understand, you can ask for the closure of the firm, you can go to the court, you can demand for the dissolution if your consent has not been obtained. Clear? Okay, first 2 points, we are very much clear. Ma'am, new partner has to be introduced. All the partners' consent is compulsory. Otherwise, it gets into dissolution. Interest in partnership firm may be transferred. Now, this is very, very interesting. This is specifically talking about the case of sub-partnership. Now let's assume there are three partners, Mr. P, Q, and R in a firm. Now this Mr. P thinks that I really want to transfer my sum of share of percentage of profits to my friend Mr. A. What happened? Once upon a time, A has lended a certain amount of loan, say rupees 10,000 to Mr. P. So now P was finding it really difficult to pay him the loan amount of rupees 10,000. So P said, look, I am partner in a firm, PQR Associates, and why don't I transfer some of my interest in the partnership firm to you? Now, this is called the case of sub-partnership. So we will say that a sub-partnership is getting formed between Mr. P and A. What is actually happening? Say, for example, if PQR were the partners in the firm for 1:1:1 ratio. So now 1/3 is the share of Mr. P. Now P can decide that, okay, 10% or 20% or whatever ratio he wants, he can transfer it to a third person, an outsider. And when a partner decides to transfer his percentage of share of profits to an outsider, it is said that a sub-partnership is said to have been created. Now, Section 29 gives him the name of transferee. So I have transferred my share. Who becomes the transferor? Mr. P becomes the transferor and Mr. A becomes the transferee in my case because I have agreed to transfer. So number one, Section 29 permits you, it allows you, it says that any interest in partnership firm can be transferred. And what is the meaning of interest? Interest means your profits and assets in the firm. So if P is having 50% share in the firm, his 50% of the assets and profits of the firm, he can transfer either entire of his share of profits to another person or maybe certain percentage, 10%, 20%, 3%, whatever percentage he wants. Now, Section 29, subsection 1 tells you what are the rights available to this Mr. A. Who is Mr. A, children? Mr. A is the transferee. In our case, the sub-partnership was formed between Mr. P and Mr. A. So who does A become? A becomes transferee, जिसको मैंने अपना share transfer करा है. The person who is transferring the share is transferor. The person who gets my share of profits is transferee. Now, 29 subsection 1 says, what are the rights available to this transferee? Number one, he only receives the share as per the profits declared by the partners. Now, if there were 9,000 rupees profits, so what will be the share of Mr. P? Mr. P gets 3,000. If P has decided to give 10% of his share further to Mr. A, so Mr. A will get only rupees 300. So whatever is the share of profits that he is entitled to receive, he will only receive that shares, whatever as per the agreement they have decided. But can this Mr. A participate in the conduct of business? Can he inspect the books? The answer is no. He has no right to participate in the business. He cannot even inspect the books. He can only eat his share of profits as per the profits declared by the partners. Got it? So simply we have to remember two very important points over here. Number one, introduction of a partner. A new partner cannot be admitted if the consent of all the partners is not given. If you don't take, failure means if you don't take the consent, you can have the dissolution of the firm. Clear hai? First 2 points typically talk about admission of a partner. Section 29, subsection 1 completely talks about your sub-partnership. So we decided PQR are the partners in a firm. P has taken certain loan amount from A. Instead of repaying the loan, he decided to transfer his share of profits to Mr. A. Now, sub-partnership is formed between Mr. P and A. What are the rights available with Mr. A? Number one, Mr. A can get the share of profits. Whatever profits are declared, whatever percentage we have decided, we will be transferring you that percentage of shares. Second, he has no right to participate in the conduct of business and inspect the books of accounts. Clear ho gaya? Two rights of Mr. A are clear. I hope you have written down this example of Mr. P and A as well. Now, let us understand what is Section 29, subsection 2 talking about. Now, what happens if the firm is getting dissolved? it says now this transferee, who is transferee, children? Transferee is Mr. A. This transferee gets all the original assets of the original partner and also gets the rights to inspect the books of accounts. Now, this is very, very interesting. It says in case during the continuation of firm, section 29(1) was dealing while the business is being continued, A cannot inspect the books. He only gets his share of profits. However, 29 subsection 2 deals when the business comes to an end. Now, if the PQR associates is getting dissolved, so A will be really worried. What will A do? How will he get his share of profits? So law says in case the firm is getting dissolved, then this Mr. A is entitled to all the assets of the original partner and also he gets the right to inspect the accounts. Now he can come and check out how the books of accounts are being maintained and please give me my share of profits. So here law says instead of share of profits, all the assets of the original partner, the transferee is entitled to get everything. So if this original partner, Mr. P, now this firm is dissolving, so he is entitled to the entire share of this original partner. So if somebody asks you, when does the transferee interferes? Only under section 29 subsection 2 when the business is coming to an end. And if I ask you, if the business is being continued, can the sub-partner interfere in the books of accounts? Then your answer will be no. And if the business is getting dissolved, then yes, he can interfere with the books of accounts. And also he gets entitled to receive the share of the assets. So whatever assets, whatever profits were, so if it was 1/3 share Mr. P was having, now entire 1/3 share Mr. A is also entitled to receive this entire assets of the original partner. So on dissolution, he will receive his share of profits also, and now he can inspect the books of accounts as well. All right. So this will become little more clearer when we'll do today the question paper which has come in the examination in November 21 and 2020 as well. So we'll take up the example and we'll understand how section 29 is actually applied in a case study as well. Now let's move to a very, very important topic, children. Minor being admitted for the benefits of partnership. So with section 29, we start talking about who can become a partner in my firm. We just now understood about a sub-partner where one of the partner is just creating a sub-partnership and that partner has no right to interfere with the books of accounts. Only when the business comes to an end, he gets all the shares of the original partner and he's also entitled to check the books of accounts. Now, second case, we are going to talk about section 30, who is your favorite baby sitting over here. Let's name him Master Y. So he's Master Y. And he thought, let me just, nowadays children have also become very much tech friendly. So although he's a little baby over here, but somebody who is less than 18 years of age is considered as a minor. So even if this child is smaller, you can assume somebody who is 16 or 17 years of age. So there is a partner who has a son of 16 years of age. He's just sitting and seeing how the accounts are being made by my father. So he went to his father that, can I also join your firm? Can I be a partner in a firm? So his father said, listen, child, any contract with minor is not valid. Do you know? CA Foundation students know about this thing, that contract with minor is not valid. Can anyone tell me the name of the case law that you have done under Indian Contract Act, which proves that minor is not competent to enter into a contract? Any contract with minor is void. Rather, it is void ab initio. So let me check out how well you have been preparing your other chapters as well. Rahul Yadav, definitely you'll get all the notes. Don't worry about that. So let me see. The minor's contract is not valid. So we all agree that ma'am, contract with minor is void. So anyone remember the name of the leading case law which says under Indian Contract Act that any contract with minor is void. In fact, it's void ab initio. Let me see who names the case law first. Okay. Few of you have already named it. Let me see how many of you remember it. Absolutely correct. You want to hear the name of the first students who has named it? Oh, wow. Namrita says it's crystal clear. That's great. Definitely you need consent of other partners, Mr. Abdul. Parth Vinod is saying transfer of interest rate. Definitely it refers to it's not the admission of a new partner, Parth. It is the sub-partnership which is being created only between Mr. P and A. Sameer, that's correct. Dissolution means ending the firm. How it happens, we'll do it in the next line. Okay, so you want to hear the name of the student who was the first one to give the answer? Ajit, Sarthak, Manisha, Jyoti, Jha, Akshanil, Varun, Sandeep, and Parth. You all are correct. Mohari Bibi versus Dharmodas Ghosh. This case law entirely proved this point that yes, a minor contract is not valid. Pushpa, Ruchi, Simran, Pooja, Dinesh, Jayanti, Yajat, Ruchi, Bajaj, Muskan, Abhi. All of you are correct, children. Very good. So I'm glad you have been revising your other contract acts and other acts as well. That's wonderful. So now you remember in that act what happened in that respective case law, that even if the advance money was taken by mortgaging the land, the court said that minor is not obliged to return the money back because it is your fault if you're entering into a contract with minor. Indian Contract Act, on the basis of the leading case law, Mohari Bibi versus Dharmodas Ghosh, it completely says that any contract with minor is void. In fact, it's void ab initio. Now, coming back to the partnership, it says that, okay, number one, the child father told him that any contract with minor is void. So you cannot I cannot enter into any contract with you. But then he said, Dad, I've started reading section 30, subsection 1 of the Indian Partnership Act. It says a minor may not be a partner in a firm, but if all the partners agree, minor for the time being may be admitted for the benefits of the partnership firm. So Dad, if your other partners agree, I can join the firm to eat the profits of the firm. So section 30 subsection 1 clearly tells you, children, that a minor, yes, can join the firm. Although, so if anyone asks you a question, ABC are partners and Master D wants to join them. So your answer will be point number 1, minor's contract is not valid. Point number 2, because minor is not competent to enter into a contract. Mohari Bibi versus Dharmodas Ghosh, as per the Indian Contract Act, any contract with the minor is void ab initio. Point number 3, you will write, if you remember section 30, it's well and fine. If you don't remember, never write a wrong section. So you will say, as per the provisions of Indian Partnership Act, a minor can become a partner in a firm. The only condition is all the partners must agree. So children, this all the partners must agree is very, very important. Section 29, where I'm transferring my interest, that is my relationship which is being created with another sub-partner. All right. There also I have to take the obligation is that all the partners must be consulted. They must be having a knowledge about this kind of thing. All right. However, under condition of minor section 30, without the consent of all the partners, you cannot make the minor join the firm. And what is the second point? The minor can join the firm only for the benefits of the partnership. Can you make minor liable for the losses? No. He will only be joining for the benefits, means only for the profits of the firm. And point number 3 says existence of partnership firm. Can I make a new firm where A, B, a partner, and Master X is joining and are making a firm? Law says no, this cannot be done. But if A, B, and C are already an existing partnership firm, then they can admit Master X in their firm. So you can never make a new firm by taking minor as a partner. But if the firm is already existing, you have rights under section 30 subsection 1 to admit a minor in the firm with the consent of all the partners. So what is the underlining point? All the partners should consent. Firm should already be existing. And the minor is admitted only for the benefits of the firm and never for the losses of the firm. Okay, so we have hired this little kid in our firm today. Let's see what are the rights and minor's position available to him. So number 1, it says I've broken down into 2 paragraphs, and those who are little anxious about the study material will definitely go and read out each and every line from study material as well. So don't worry about that. But let us first read the summarized form so that you have a good knowledge about what it is saying about. So it says minor's position during minority. Number one, minor has the right to profit and access all the accounts and inspect the books of accounts. So it says, although I am a minor, but I get the right to profits. I just now told you that the minor has the right to get the share of profit that is agreed. So if you have agreed to give him 1/3 of the share or 1/4, whatever is agreed, he has the right to receive those profits. Number two, can he inspect the books of accounts? I told you in the beginning, the right to access the accounts, all the partners have the right to inspect the books of accounts. But can you audit the accounts? Partner is not required to audit the accounts. You cannot raise suspicion among the other partners, but you can only check the books of accounts. Now, if you ask me, ma'am, a minor is not having good knowledge, how can he do so? So he can ask one of his uncle or maybe some assistant or maybe an elder brother who can help him in understanding, or maybe his father. So he can get it inspected from any senior elder person as well. But does he has the right? Yes, he has the right. How he exercises it, that is a separate story. So minor has the right to get his share of profits, and he can also access the books of accounts. उसे अगर नहीं भी समझ आ रहा, he can take the help of his elder brother or father in order to understand what the books of accounts are saying. Limitation is that he cannot inspect other papers. So he cannot keep on asking for other files, what are the supplier files, how the things are happening. The only thing is, if he want to sue the firm for any accounts, or if he want to recover his share of profits, then he must sever his connection with the firm. What is the meaning of severing your connection? Means removing your connection, means cut your connections with the firm. So if there is a minor partner, Master X, and he feels that his share of profits are not being given, and now he thought of filing a case. Suing the firm means he wants to go to the court and he wants to file a case. Then law says in such a case, the minor must cut his connection with the firm first. So if PQR associates have hired, taken a partner, Master X, and now this Master X is not satisfied, so he must leave his connection with PQR associates. He will retire from there, or he should leave the firm, and then he can go to the court and file an action for the accounts as well as for recovery of his share of profits. All right. So these are the rights available to a minor. While he's a minor, he has the right to inspect the books of accounts. He has the right to share of profits. But if he wants to take up any action against the partners, then he must cut his relationship with the firm. Then only he can go to the court. And what is another right? It says, on attaining majority, what happens on attaining majority? It says, once the minor becomes a major, within 6 months, he must give a public notice of attaining majority or acquiring the knowledge. He can decide to continue or discontinue the partnership. It says if minor fails to give any such notice, it will be considered as if he has chosen to become a partner in the firm. So law says if you have become a major, so within public notice must be given within 6 months of attaining majority. So say, for example, on 10th December 2020, if you became a major. Now, within 6 months of this 2020 December, that means Jan, Feb, March, April, May, June. So by end of June, you must give a public notice that I have decided to continue the firm or not to continue the firm. So whenever you become major, you must, so 6 months is the time period that law has given you, that within 6 months, you must decide whether you want to continue in the partnership as a partner or you want to discontinue. And failure to give notice means if you have not given any notice and it is now the month of August going on, 6 months have already expired in the month of July, August, you have still not given any notice, it will be assumed you are a partner in the firm. Now, ma'am, why 6 months notice is important? What will happen if he is considered as a partner in the firm? Many things will happen. Once a minor chooses to become a partner, or maybe because he failed to give a notice, he becomes a partner, he becomes personally liable for all the acts of the firm with a retrospective effect. You want to go to the study material? Let's go and understand what is the meaning of retrospective effect, in other words. But I hope you have written down all these points of minor's position during minority. So children, we will go step by step. As of now, what we have done is a subsection 30, analysis of section 30 in your study material, the rights and liabilities during the minority we have discussed. Now let us go to the study material and let's have a brief understanding. What will happen if the minor is admitted as a partner after becoming major. So all those who were looking into section 23 and 24, we have already discussed. So since the study material is here in front of you, so children, section 23 simply talks about any actions done by a firm. It will be considered as if whole of the firm is responsible. Admission by a partner. I made you do this topic. I remember we have written down the notes also at the last session. So admission means any actions. So here admission word representations means any actions taken by one of the partner. It will be considered all the firm is liable. So in this particular case law, we understood in this example that where X and Y were dealing in the spare parts of the motorcycle, and Z, one of the customer, has purchased them after X told them that this is suitable for the motorcycle. Now, law says even if Y is not aware of this transaction, at least one partner was aware, right? So X was a partner in a firm. He was aware that he is doing something, and it will be considered that the action has been taken by the firm. So both of them were responsible to Z for this loss. You cannot say that, Y cannot say that, okay, X has done this transaction. Why are you holding me responsible? Section 23 says if one of the partner is doing something, it will be considered whole of the firm is responsible. Similarly, about section 24, we had a discussion. If one of the partner is having knowledge about the wrong things, it will be considered that the firm is having the knowledge about this thing. The only exception was in the case of fraud. I remember I gave you homework to read section 9. So in section 9, it was, in example number 9, I gave you this as homework. So let us have a talk about this. It says the only exception is in the case of fraud. So if any one of the partner is doing any fraud, then you cannot hold the firm liable, because cheating में, fraud में तो हमारी कोई गलती नहीं है ना, हम उसमें involved नहीं. So like Mr. A was trying to keep a secret profits. We told him that you are bound to return the profits because you have done something wrong. You cannot even do a competing business with the firm. But here it says, section 24 simply says if one of the partner is having notice about the any particular nature, then it will be considered whole of the firm is having the notice. So where this Mr. R was having a knowledge that the car belonged to this stolen one car belongs to X, then even if P and Q were ignorant, it was considered that one of the partner is having the knowledge, whole of the firm becomes liable. However, in this particular case, it says a partner who actively participates brought his firm certain goods and he knew that there was particular defect in the goods. Now, his knowledge about this defect will be considered as the knowledge of the firm, although the other partners were not aware of the defect. But because A, now he's trying to tell you, A has conspired to conceal the defect. Here he is trying to commit a certain kind of fraud. Then law says other partners will not be held liable. So in your own words, you can simply write down an example number 9. We are understanding where one of the partner is concealing the defect. He is hiding the thing from other partners. Then section 24 exception will become applicable. That means other partners are entitled to reject the goods and the firm will not be liable in such a case of a fraud. Okay, now let's jump to section. All those queries have also been answered in between. Let's jump to section 30. So this is your section 30, children. A minor can be admitted. We just discussed his share of profits will only be entitled. Whatever we have decided to pay him, he will only be getting that particular share and he cannot have also right to inspect the books. He is liable for the acts of the firm. Yes, but minor is never personally liable. So if I ask you, minor has an unlimited liability, yes or no? If I say all the partners have unlimited liability, will we say that the minor also has an unlimited liability? Mr. Mushti Kumar, you can keep sending your queries and generally we try to take up queries at the end of the session. So in between, if you find something, you can send that. All right. So tell me, children, I was asking you something that does the minor has unlimited liability? Yes or no? No, Vanshika, it's not compulsory to remember the name of the case laws. If you can, it's well and good, but it's not compulsory. Taruna, definitely not. Transferee is only given the rights to share the profits and he only get the right to inspect the books of accounts if the dissolution is happening. Otherwise, he will not be held liable for any losses. So children, my question to all of you is, does a minor has unlimited liability? Excellent, Mohammed Ahmed, Vanshika Gupta, Sandeep Kumar. Those who are writing, no ma'am, minor never have an unlimited liability. Alfia, Jatin, Mayu, Danesh, Namrita, Rujita, all of you are correct. Minor is never personally liable means, so you can simply write down here, that means minor does not has an unlimited liability like other partners have. Why? Because minor is only admitted for the benefits of the firm, so he can only enjoy the profits of the firm and he is never hold personally liable. Personally liable means that he is not required to bring his assets from the firm and pay off the liabilities of the firm. This is not required to be done. So these are the certain rights which we have just spoken about, and on attaining majority within. So children, this is all of the section 13 legal language, sub clauses 7, 8, 9, everything has been given. What you have to read from study material is analysis of section 13. So it's a replicate of what is written in the law. They are trying to give you in a simpler language. So you can simply read, it is observed minor, any contract is void. It is not merely voidable. He cannot become a partner, but if it is found that for the benefits of partnership, we can make him join in the partnership. He can only be given a share in the partnership profits and he cannot be held personally liable. And what did I tell you? If you want to take an action against the firm, he need to cut his connection with the firm, then only he can file up a case for his share of profits. And what is the time period for giving a notice? Within 6 months of electing to become a partner or not to become a partner, he must give a public notice. Now, what are his liabilities? So my children just told me that, ma'am, he does not have unlimited liability. Excellent. That means he's not personally liable. His liability is limited only to the extent of his share and profits in the firm. So if I have made you a partner for 1/4 share in the firm, then only for that 1/4 share of profits, you'll be liable, not personally liable. What is the meaning of unlimited liability? Even your personal assets are liable, but this is not the case in minor. Only his share of profits will be liable for the actions of the firm. Clear ho gaya? Minor cannot be declared insolvent even if the firm is declared insolvent. His share of profits rather lies with the official receiver. Now, this point, subclause C, is very, very important. This is where you face a problem. It says minor cannot be, children, while we are doing these points, my humble request, please pay attention. I'm not reading the queries right now. So we'll take up the queries after we have done this topic. Very good, Neha Yadav, Ankit, Namrata, Akshanil, Mr. Reddy, Chandan. So we have 2 Chandans, K. Chandan and Chandan Shah. Mohammad Dipashi, Omvati, Shivam Chaudhary. Excellent. Minor is never held liable personally. Bilkul theek. But now, once the minor becomes a major and he is admitted to the partnership, then we have to understand what will happen with the rules. So very good, children. You all are paying very good attention. So just listen to this point. Now it says minor cannot be declared insolvent. What is the meaning of insolvent? When my assets are not sufficient to pay off my liabilities. Now, what happened? It says if the firm is declared insolvent. So there was a firm, ABC Associates, and it got insolvent. It was not doing well in the business and the firm failed to pay to their creditors. Therefore, law declared them insolvent firm. Now, there was a partner, Master X, in their firm. Do you think this Master X also becomes insolvent? Law says no. In fact, this Master X will now become the creditor of the firm. He can still stand with the creditors standing in front of the official receiver, and he will also say that, please give me my share of profits. Minor never become personally liable. In fact, even in the case of insolvency, minor cannot be held liable to pay off the creditors. Law says minor step into the shoes of the creditors and he will stand in front of the official receiver. Who is the official receiver? So when ABC Associates became insolvent, an official receiver is appointed by the court who will manage all the assets of ABC Associates. Now, official receiver will decide how to dispose of the assets and how to make the payment to the creditors. So law says while the payment is being made to the creditors, they will also pay the share of profits to Master X. So this minor will also stand with the creditors for his share of profits and he will not be liable. In fact, he will also stand with the creditors and he will get his share of profits. Clear ho gaya insolvency wala point? Now let's move to the attaining majority. And so children, within 6 months of his attaining majority or of his knowledge that he has admitted to the partnership, whichever date is later. So while you were joining the firm or you became major on that date, whichever is the later date, from that you have to count the 6 months to become a partner. Now, if he becomes a partner, this is very, very interesting. So all the eyes and ears here. So number one, it says when he becomes a partner, if the minor becomes a partner of his own willingness. So I said, okay, on 20th December 2020, I become major. So, okay, I have chosen to become a partner. Or it is July 2021 and I did not give the public notice. Therefore, I become a partner. So I can become partner in two ways. Either I chose willingness, means I have chosen to become a partner, or I failed to give the public notice. Therefore, I become a partner. Now my rights and liabilities will be as per section 30 subsection 7. Law says now the minor will personally become liable to third parties for all the acts of the firm done since the date he was admitted to the benefits of partnership. So it says with the retrospective effect, the minor becomes liable for the actions of the firm, and not just liable, he becomes personally liable, means now my liability becomes unlimited. So simple, once the minor becomes major, he becomes personally liable to the third parties. For what actions? Do you think after 2020, after he became major? No. Say, for example, if he has joined the firm in June 2020, say, for example, minor joined the firm in 1st June 2020 and he became major on 20th December 2020. Minor joined the firm on 1st June 2020 and he became major on 20th December 2020. So minor will be liable for what all actions? It says from 1st June 2020, whatever actions have been taken by the firm, minor becomes liable. Not from 20th December, from the date of becoming major, wahan se liable nahi hai. He becomes liable from the date of joining. Since the date means since the date he has joined the firm. And second part is even more interesting. It says his share of profits and property remains the same. So you were giving me 1/4 share. I am still having the 1/4 share. It says the share of profits remain the same to which he was entitled as a minor. So it is a very careful decision to be taken by a minor in order to become a major. So this Master X really thinks that the firm is really doing well and it is having lots and lots of profits. So I think I have turned major. I will become a partner in this firm. Now, when he has decided, it should be a very sensible decision because your profits will remain the same, but your liability becomes unlimited. Understood? Now, and if I decide not to become a minor, minor decides not to become a partner, then what happens? His rights and liabilities continue to be those of a minor up till the date of public notice. So now minor has to give a public notice. He has to publicly announce, maybe in the newspaper advertisements, he will be giving a notice that I've chosen not to become a partner. Why do you think a public notice is important? Because, my dear children, if he is not giving a public notice, he becomes personally liable to third parties. Therefore, he has to inform, he has to publicly send a notice that I have chosen not to become a minor. So his rights and liabilities will also come to an end. His share will not be liable then after the notice. His share of profits will not be liable. He shall be entitled to sue the partners provided he has given the notice to the registrar that he does not want to become a partner. So it says, I told you he can sue the partners for his share of profits only if he has cut his connection with the firm. Then definitely he can also file a case against the firm if his share of profits are not paid to him. Clear, children? So let's take a small halt over here and I'll just go through your queries. So just read whatever we have discussed in minor's case, and in case you still feel you want to discuss something, we'll take up the queries. So let's take a small break here. All right, welcome back, students. So I was just going through your queries. Yes, definitely the share will be limited to the extent of his profits if he minor chooses not to become a partner. So I hope this topic is clear to each and everyone. We'll be now proceeding ahead with the introduction and admission of a partner. Vanshika Gupta, you're still between section 11, section 12. Children, please understand those are the rights and duties for the partnership. So you can refer to I think you did not attend my previous session. So you can see the recorded lecture. Each and every point is very clearly explained in that one. Okay. Otherwise, it will take too long if we start covering those topics again. No, Mr. Abdul, there is nothing mentioned about introducing of the capital to the firm, but in case he's bringing, that's absolutely normal. It will be considered, after he becomes a minor, becomes a major, he will be considered as a normal partner. Okay. That's absolutely correct, Priyanka. Since 1st June, the date that you have written, that is absolutely correct. So, Mr. Vikhayat Singh, I think this is how you spell it, pronounce it, Vikhayat Singh. So, weightage of the chapter, once we go to the examination questions, I will tell you what all questions come in the exam for partnership. If minor does any cheating with the partners, Sandeep Kumar, so if any cheating or anything illegal any partner does, a legal action can definitely be taken against that person. Yes, Neha Yadav, that's absolutely correct for insolvency. Jagruti is saying, got it. That's great if you have understood. A partner is not debarred from transferring its interest. It says, Khushi Baranwal. So Miss Khushi, where it says that although the partner generally cannot transfer his entire interest, but wherein the transaction I just explained you, that if any of the partner is giving his share of profits to another partner, then a sub-partnership is said to be created. The other partners gets the right of a transfer. So it says generally you cannot just seize off and to be a partner and you transfer your entire share to another person. But like a situation I gave you that he had to pay the money. So instead of repaying the loan, I will be giving you my share of profits and certain percentage can be transferred as per section 29, subsection 1. So Jyotija, it typically talks about the sharing of profits where we tell you that the transferee will be entitled to receive the share of profits and he's not anyways interfering in the conduct of the business. So whatever profits, if the firm is having profits, he will get, but he will not become liable for the actions of the firm. Good, Mansi. I'm glad it's clear to you. Shiv Tripathi, section 29 will become more clear, children, when we will do the example from the case study that I have for you. So you pay attention over there as well. Simply it's talking about the sub-partnership. Definitely the consent of other partners will be required, Mushti Kumar. Sarvesh is asking how the minor is entitled to the property of the firm. So minor is not entitled to the property of the firm. It says minor is entitled to receive his share of profits. So if I have decided that you will become, you as a minor will become partner in the firm and you will be getting 1/6 of the profits. So whatever the profits my firm will be earning, 1/6 of that, whatever has been agreed, you are entitled to receive those profits. All right. Shivam Chaudhary, if a minor decides to leave the firm, then he can get the share in the business, definitely. And even if his share of profits and other things are not given to him, he can also file an action against the firm. He can sue the firm. But the only thing is he has to leave the firm before taking any action against the particular firm. Ms. Kusum Rawat needs to understand point number 6 in case of minor. So from which date he becomes personally liable, Neha Yadav, you have to see the date, whichever is later, the date of becoming a major or the date on which he was admitted for the partnership, whichever is the later date, you have to count the 6 months from that. Severe means to cut his connection. Vanchika, it means we have to leave the firm and then only we can take up action. Mayur, sleeping partner is different from a minor partner. Minor is somebody who has to be seen as per the age of a partner. Sleeping partner is a partner who is not actively engaged in the management decisions. Okay, so both of them are different. All right. Hira Hussain, you simply have to understand that by giving a notice. So when you're not giving a public notice, so when we say, okay, children, let's go to the minor act once again, many of you are still sailing in some of the other problems in between minor. So please pay attention once again. So listen carefully now. When we say that the minor becomes personally liable, this is clear for all the acts of the firm done since the date we have joined. So we just did an example of December 2020 and June, and you all understood from June 20, he will become liable. His share in the property and profits of the firm remain the same, means if he was entitled to 1/6 of the share, now also 1/6 will continue. The problem is he will not be liable if he chooses not to become a partner. Now, this is the problem which arises. He shall entitle to sue the partners for his share, but such minor shall give a notice to the registrar that he has decided to become a partner or not. So if you are trying to take up any action against the firm, you must give a notice to the registrar. So here is your problem of 6 months. It says within 6 months of attaining majority. So if I have become a major on December 2020, so 6 months count from December, January, February, March, April, May, June. So by June 2021, I should give a public notice, or of his obtaining the knowledge that he has been admitted to the benefits of partnership. So say, for example, he has joined in June. So it says you joined in June 2020, whichever the date is later. So which one was the later date? December 2020, right? So you'll have to count your 6 months from December 2020 and not from June 2020, because till then he became major only. So he has to take a decision within these 6 months of attaining majority, whether he wants to become a partner or not. Now, second thing is giving a public notice. It says if I have not given a public notice within the specified time, means within 6 months, if I don't tell, I don't publicly announce it, I have not given it in any newspapers or advertisements, I have not told it. Now, how the public notice has to be given, it depends upon the firm. The firm may take it out in the newspaper or some advertisement is given. So you have to tell the public who is dealing with that firm that now this minor is no longer dealing with us. Failure to give the notice means if you have not informed the public, you are still be assumed to be a partner in the firm. Then since now you have become major, so therefore you personally become liable to the third parties. All right. So all these children who have asked about the point about Hira Hussain, I hope now it's clear to you. Miss Hira. Sandeep Kumar, if I write the sections in exam, definitely sections give a good impression, but never write a wrong section. So Bhumika, you have to see what kind of decisions and agreements we are having with the minor once he becomes the major. And if we try to change in the agreements and if we decided to give the share of profits different, then it is altogether a separate story. But if you specifically see in section 30, subsection 7 is trying to teach you that although you become personally liable, but your share of profits remain the same. What happens after 2 to 3 years, that's absolutely their choice. The firm can also become a limited liability partnership. वो तो कुछ भी हो सकता है. So partnership has the flexibility of agreement. So please don't keep asking me, ma'am, अगर उन्होंने ये agree कर लिया और ये हो गया, तो partners have the liberty to amend their agreement. Ashutosh Mishra, unanimous consent means consent of all the partners. So Shiba Khan, if there is a minor, if somebody is having a son at home and he is still not at 18 years of age, so the section 30 gives you the provision that yes, if a minor wants to become a partner, he can for the benefits of the partnership. Mushti Kumar, definitely he is not liable for any acts of the firm done, the question that you have asked. If Manisha Tehlani, if minor chooses not to become a partner, then definitely he will not be liable for the actions of the firm done after he has given the public notice. Okay, children, now let's understand what is the meaning of incoming and outgoing partners. Once again, we'll go back to your queries, but let's now, all the relevant queries we have generally covered, but still somebody who is sailing between aisa ho jayega, vaisa ho jayega, then what we will do. So never mind, we'll take that after 1 o'clock now. So because it's completion of chapter is more important. So incoming and outgoing of partners, children, we have understood unanimous consent. Aap sab abhi pooch hi rahe the. Unanimous consent means consent of all the partners. So it is subject to section 30. So subject to section 30. What is section 30? Section 30 typically talks about minor. So we have certain MCQs also for minor. We have certain examination question papers also, children. Once we understand, then it will become little more clear. Okay. I understand your anxiety about the topics. Even when I was a student, when I used to read the law for the very first time, I used to find it difficult. But then your mind maps, your road maps, your flow charts, all these kind of things really help you to revise the content and keep it in your mind. Now, if you'll see related to minor, so many things I have informed you. तो वो एकदम से हम intelligent नहीं बन सकते कि हमें सब समझ आए. But see, what you have to apply your mind is rights and liabilities during minority. This is what happens. If I've chosen to become major, I become personally liable and my share of profit remain the same. If I have given a public notice and I don't want to become a major, then my share of profits, whatever the share were there, I can take up an action against the firm for my share of profits and I will not be liable for any actions of the firm. Simple. वो कैपिटल लाया, क्या हुआ, उसने चाय पी, what did they do after that, how the minor was engaged. These are just your mindsets that come into your mind. But what you have to remember is what is given under section 30, subsection 1, 2, 3, 4, 5, 6, 7, 8, 9. That's it. So you have to learn it. Those who ask me, ma'am, do we have to learn it? Yes, you have to learn it. Now, the beauty of learning is if you want to draw it charts and if you want to learn it in that ways, just write down in points and try to take it up like that. Regarding section 29, we anyways have the good Bhumika. I'm glad. So regarding section 29, we anyways have a question also coming up regarding the case study. So it will get little more clearer once we'll do that as well. So it says, now let's come back to the incoming partner. Section 31, subsection 1 and 2 talks about your new partner who is joining. Incoming partner means if a new partner is joining the firm, all the partners should give a consent that yes, we are happy that you're joining the firm. So this is Mr. A in the picture and this is Mr. B. And Mr. B is saying, look, Mr. A, this Mr. C is also joining us in the firm. So they all are happy about his joining. So both the partners have agreed, then yes, Mr. C can join the firm. So no person can be introduced without his consent. So without unanimous consent, it is not possible. So for minor also, all the partners need to consent, and for admission of a new partner also, all the partners need to consent. Now, children, if this Mr. C is joining my firm on 1st June 2018, what did I say? This Mr. C is joining the firm on 1st June 2018. And there was a loan which was taken by the firm on 31st March 2018. So a firm has taken up a loan before Mr. C is joining. Do you think that Mr. C is also liable to pay this loan which was taken before his joining, that is 31st March? Please answer me yes, ma'am, or no, ma'am. Section 31, subsection 2 says, yes, Mr. Tarun Maheshwari, that's absolutely correct. That is the only way that you can make the notes, highlighting and other things. And yes, definitely you can learn that much. That is important. Harshita, the consequences of minor as a partner, I just explained you, child. So let's finish it off. And once again, we'll come to that. All right, children, please give me an answer. I am asking you that on 1st June 2018, a new partner, Mr. C, is joining. Number one, the partners have consented. Yes, ma'am, they have consented. That is why Mr. C is joining. There was a loan which was taken by the firm on 31st March 2018. Do you think Mr. C is also liable for this loan? Excellent. Bhumika, Ruchi, Vanshika, Piyush, Rutuja, Bharat, IG, Yajat, Mushti, Neha Yadav, Jyoti, all of you, Nikhil, Komalakshi, Aryan Agarwal, those who have given the correct answer, Mohammed, Dhairya, excellent. No, ma'am, C is not liable as he has joined after this date. So therefore, children, so 2 points we have done. No person is liable for any act done before his partnership. So this is what the second point says, that you are liable only for the actions done after your joining and not liable for the actions done by the firm before your joining. All right. Nothing prevents him to take up the liability if he wants to take up for the previous action. So if he is willing that, okay, I am from a very, rich family and I've been doing great business, so I don't mind taking up your previous liabilities also, then it is a separate story. Partnership agreement gives you a flexibility to decide whatever you want to decide, provided you are doing it within the provisions of Indian Partnership Act. So it says nothing prevents him, means nobody is stopping him. If he really feels, Mr. C says, okay, fine, I am willing to repay that loan, please do that. But otherwise, in general, your answer is absolutely correct. Those who have written no, ma'am. Khushi, Namrata, Shivam, Chaudhary, Shubham, excellent. All of you are correct. He's only liable for the liabilities after joining. Anuja, Ganga, Bilkul theek. Jagruti, Sumit, all of you are correct. So understood, admission of partner, new partner, incoming, section 31 is clear. Now let's talk about section 32. So here this partner is going, he's saying, bye-bye, I'm running away and I'm leaving the firm. So outgoing partner means somebody who is leaving the firm. Incoming partner, somebody who is joining the firm. So two partners join the firm. One is minor, section 30. We have understood section 30. What are the rights, liabilities during minority, after becoming a major? And section 31 tells us how a normal partner is introduced in the firm. He will not be liable for any actions of the firm before joining his partnership. Now, section 32, 33, 34, 35 completely talks about the outgoing partners, partner who is leaving the firm. So number one, they leave on retirement, so it is 60 years of age, or they have voluntarily decided to take up the retirement. So he says, okay, fine, bye, I'm leaving. So these three partners, A, B, C, are very happy. Okay, fine, now we'll continue the partnership firm and this Mr. D is running and retiring. So there can be the case of insolvency. Section 34, any of the partner has become insolvent, or maybe one of the partner has died. Or section 33, expulsion of partner, very, very important and one of my favorites. I really enjoy teaching you this topic, section 33, because it's very interesting. But again, it has few points which you need to understand very carefully. Now, in expulsion of partner, we won't be talking about unanimous consent. We'll be talking about the majority of partners' consent. So that is why it is very important to understand where the consent of all the partners is required, where the consent of majority of partners is required. Firm is not necessarily dissolved and the partnership may still continue. So the partnership is still continued between A, B, and C. Outgoing partner not necessarily leads to dissolution. The remaining partners can still continue the firm. Now let us understand section 32. It says retirement of a partner. So how the partner retires, consent of all the partners. So if Mr. D is leaving the firm, A, B, and C, all of them should agree that, okay, fine, we are agreeing that you can leave the firm. If only A and B are agreeing and C has not agreed, then it becomes a problem. Consent of all the partners is must. As per the agreement, so ये तो partnership में है ही है, क्योंकि हमने admission भी as per agreement करनी है and retirement भी as per agreement. So whatever provisions are written in our agreement, we should comply with that. And in case of partnership at will, so somebody in the morning was asking me partnership at will. So partnership at will means partnership is as per our choice. We have not determined the fixed period. So here you need to simply give a notice in writing and you retire. So say, for example, you and me, we are partners and we have not decided the fixed term. So it is a partnership at will. Now I don't want to do any business with you. So I simply need to send a notice in writing. Look, Mr. B, I don't want to do any business. I want to leave the firm. So by giving a notice in writing in partnership at will, we can retire. The way we were not liable for any acts done before admission, similarly, you will not be liable for any acts done after retirement. So it says before you retire, you will remain liable for all the actions. A partner can retire from the firm, but not from his liability. He may be discharged to his liability done before retirement if it is decided by an agreement. Dekho, bar he is telling you that if we have agreed, then we can do anything. So what is he trying to tell you? Now, if you are retiring on 10th December 2018, say Mr. D, he is retiring on 10th December 2018. And there was a loan taken by the firm on 1st June 2018 while he was a partner. Is he liable for this loan? The answer is yes. So he is liable to the outsiders for any acts done before his retirement. But it says that if by an agreement we have decided, okay, fine, he is leaving the firm, so let's decide he will no longer be liable, then he can choose not to be liable for this particular loan. So generally, he remains liable. It says retirement doesn't mean that you don't have to pay for the liabilities. You will definitely be liable for the subsisting liabilities, means the liabilities which were existing while you were a partner, but you can be discharged. You can be discharged means you can be removed from this liability, provided there is an agreement to that extent. So if we have made an agreement with the third party that, okay, fine, this Mr. D won't be liable for this loan, then so anyways, you're not liable. But if there is no agreement to this effect, then it is generally assumed that whatever actions were taken by the firm before you retire, you will remain liable. All right. So let's proceed further. So it says liability done after retirement. Now it talks about your after retirement. So now you all know you will be liable only till the time public notice has been given. So the way minor was not liable after the public notice is given. So here a normal partner is retiring. He will not be liable if he has given a public notice. He is not liable who deals with the firm without knowing that he was a partner. So if you have publicly announced that Mr. D is now no longer a partner with us, then whatever actions are taken by the firm after his retirement, he will no longer remain liable. So those who were asking about sleeping partners, do you think dormant partner needs to give a public notice? No. Insolvent? No. Death of a partner? No. So it says in these three cases, children, no public notice is required. Why? Because the partner has died. The partner has become insolvent. Court ne usko insolvent declare kar diya. He doesn't have money to pay off. So no public notice is required. And a sleeping partner is never required to give a public notice. Why? Because he was never known to the people as partner. He's not participating. So this case, no public notice is required. Notice may be given by the retiring partner or any other new partners. So ABC can also give a notice or D can himself give a public notice. But public notice is very important if we want to remove his liabilities for the acts done after retirement. Now let us understand what is the meaning of public notice. So there was a dealer who was dealing with this firm. PQR is a firm which is dealing with ABC Associates. So ABCD Associates, and this Mr. D is retiring from the firm. So during when D was a partner in this firm, they have generally been dealing with one of the dealer, Mr. R. Okay, let's make a new dealer. So there is a firm, children. There was this firm, ABCD Associates. Okay. D is retiring. Who is retiring? D is retiring from the firm. And they had certain transactions made with dealer Mr. R. So there was a dealer with which the firm was dealing, Mr. R. Now, R came for the recovery of money to the firm ABC Associates. Now, if D has retired without giving a public notice, he failed to give a public notice. Okay, listen carefully. I'm going to ask you only. So D retired from the firm and he did not give any public notice. So do you think, you remember mutual regency relationship? If ABC are doing any transaction, Mr. R, so Mr. R can recover the money from either A, either B, either C, or either D. So do you think can R recover his money from Mr. D? Can he go to Mr. D and he can say that, give me my money is still pending, your firm is not giving my money? Is D still held liable to Mr. R? Yes or no? Quickly answer me, and I want the answer with explanation. So if D has retired from the firm, so you will say, no ma'am, he is not liable because he has already retired from the firm. So what is the loophole over here? Can R recover his money? The answer is R. Why R is approaching Mr. D? Because he has not given any public notice. Therefore, R is assuming that Mr. D is, R will assume that D is still a partner in the firm. That's why it is very, very important to give a public notice, because the dealers who are dealing with the firm, how will they come to know? They will not have a dream that one of the partners has retired. They have to be informed. So this is the importance and meaning of giving a public notice. So all those who were asking, ma'am, why public notice is required? What is the meaning of public notice? This is the meaning of public notice. So if you'll not publicly inform the dealers, they will not come to know. And now you tell me, can R recover his money from D? So R can definitely approach Mr. D. Definitely. Bilkul theek. Sujal Gupta, Dhruv, Dinesh, Rutuja, Khushi, Manisha, Piyush, Chetan, bilkul theek bola aapne. Although he will not be held liable, but R can still approach him. Why? Because he will assume that D is still a partner. So if you have to assume from your liabilities, if you want to get rid of your liabilities, you need to give a public notice. And if he has given a public notice, absolutely correct, those who have written yes. Hira Hussain says, yes, ma'am, because R is thinking that he's a partner. Excellent, that's correct. All of you are correct. Oh, those Vidhi, Bagla, Muhammad, Jaspreet, Alfia, all of you are correct. Good children. That means you understand. Clear as section 22 is also clear. Expulsion of a partner will just come in a while. Let's complete the insolvency also. Now, insolvency is very beautifully given in a nice chart. Paper has been given in your study material. If you'll see that circle that they have given. So it simply says, once you become an insolvent, you ceases to be a partner, means you are no longer a partner if the court has declared you insolvent. And where the firm has not been dissolved, the estate of insolvent partner is not liable for any acts of the firm done, and the firm is also not liable for any acts of the insolvent partner. Now, what does it mean? A partner ceases to be an insolvent means if a partner has been declared insolvent on 1st June 2018. So now from 1st June 2018, he will be no longer considered a partner in my firm. And any actions taken by the firm after 1st June 2018, neither this partner is liable nor the firm is liable for this insolvent partner. Simple. Once you leave the firm, once you retire the firm, none of the firm and partner having any relationship, neither the firm will be held liable. Say, for example, firm is not dissolved and they're still continuing the firm. So this insolvent partner is not liable for the actions of the firm. Similarly, if this insolvent person is still doing any business, the firm is not liable for any of his actions. So from the date of insolvency, both the parties will be cease to be held liable for their actions. All right. So you can easily go through the beautiful chart which is given in your study material. And this is the summary of section 34 subsection 1 and section 34 subsection 2. Similarly, in case of a death of a partner, in case the firm is dissolved by death of the partner, estate. What is the meaning of estate? Estate means property. What is the meaning of estate? Estate means property of the deceased partner. Deceased partner means the partner who has died. So it says the property of the died partner will not be liable for any acts of the firm done after his death. So if a partner has died in 1st July 2019, so anything done by the firm after 1st July 2019, the property of the partner who has died will not be held liable. So only the actions while he was a partner, while he was alive, he will be held liable only for those actions. Anything done after his death, this particular partner will never be held liable. Okay, so we'll take up the example which is given in the study material once we go over there. All right. Now, these are certain rights of outgoing partners. These are again very important topics which I have in the examination question paper coming up for you. Section 36 and section 37. What does section 36 and somebody was asking me agreement in restraint of trade in the morning. Remember? You raised a query for agreement in restraint of trade. Now here comes your answer. So we have been talking about outgoing partners. How do the partners outgo? Retirement, death, insolvency, or the partner has left the firm on the basis of age or any other reason. That is known as an outgoing partner. Now section 36 talks about the rights of the outgoing partner. I told you the previous day that you cannot carry on the competing business. So if A, B, C were partners in a firm and they were dealing in a certain, they were, dealers in cloth business. Now, if Mr. C is leaving the firm, he is retiring from the firm and he set up a same store in front of A, B, C's office. So he thought, although I was a partner in this firm, and now he thinks that I will set up the same showroom and I will use the firm name, or I will try to solicit, means I will try to attract the customers. So he was already having a good knowledge of the customers when he was partner in ABC Associates. And now he's trying to attract the same customers for his own business. Do you think Mr. C can do this Is it advisable? Section 36 says, no, it is not done. You cannot use the same firm's name. You cannot represent, once you have retired, you cannot represent yourself as carrying on the business of the firm. And neither you can solicit the customers of the firm. Means you cannot attract, you cannot ask the customers, you cannot take the same customers. Now this Mr. C goes and he says, earlier I was a partner in ABC Associates and now have started my own sole proprietor business. Why don't you come and purchase the cloth from me? So section 36 will become applicable. Section 36 subsection 2 says there are restrictions on competing business. You cannot do the business within the specified limits and within the specified area. Also, you cannot attract the customers of the old firm. All right. Say, let's take another simple example. You have been an employee in a college and, you have been taking up lectures in that college. And now when you leave that college, you have been an employee in a college. And when you leave that college, you just tell all the students that I'm leaving this college. And now I will be taking all these students whom I was teaching here. I will take in my separate business. So law says section 36 becomes applicable. You cannot take the revenue profits of a particular organization where you have been earning the profits, efforts, and money that you have invested. The clientage has come because of your presence in that particular partnership firm. And now you are trying to use the same firm's name. This is not done. So you cannot compete with your previous organization. Like as an employee, you cannot compete with your previous organization. Similarly, as a partner also, you cannot have a competition with your own previous firm. So what points you have to remember? You cannot use the same firm's name. You cannot represent yourself as you are the partner in the previous firm, and you cannot attract the customers of the firm. Second point says that there are certain time limits and area where you cannot do the business. So say, for example, if in, let's take an example of Delhi. So Delhi is very vast. It's a very big city. So if you were doing in Lakshmi Nagar, if you were doing a business in a partnership firm, so the partner said that since now you're retiring, so within this 15-20 kilometers area, you cannot set up the business. And maybe in some other area, you can go and set up the business because we have built a good reputation over here. Now, if the partners say that entire Delhi city, you cannot do the business. You can't even, do the business in Gurgaon. So law says this is something not reasonable. So there have to be certain limits. You can only restrict. You cannot ask the person not to do business at all only. Obviously, he will be doing something to earn his bread and butter. So certain restrictions, agreement and restraint of trade means certain restrictions imposed by Section 27 of the Indian Contract Act are reasonable, which is acceptable. So if I'm telling you that within 10 to 15 kilometers and for at least 2 years, you should not do the business here, that is quite reasonable. But if the firm says for next 20 years, you cannot do the business, for next 10 years, you will not do the business here, and in the entire city, in India only, you cannot do the business. This is not reasonable. This is unreasonable. So law says these kind of restrictions cannot be imposed. Clear? And then the right to share the subsequent profit, Section 37 is also very, very interesting. It says if the firm is still continuing with your estate, like for example, one of the partners has retired, but still the firm has not been dissolved, the firm is still doing the business, and your profits have to be still not, your settlement of the property is still not made. So now this outgoing partner has the right to get the share of profits at the rate of 6% per annum. So there is also a very interesting example given in a study material. So we'll just read that example from Section 37. But generally, what does it say is that if the rights of outgoing profits, if the subsequent profits, if the settlement is still pending, if the outgoing partner, the settlement is still pending, then the partner who has outgoing or his legal representatives are entitled to get the profits proportionate to their share or interest at the rate of 6% per annum. Because since ABC Associates were running the business, now Mr. A has retired. You have not paid his share of profits and you're still doing business. So this B and C Associates become liable to pay to Mr. A the interest at the rate of 6% per annum. Clear? Now, let us take these examples first and then we'll come to the quiz. Because I really don't want you to leave any of the examples from the study material since it's very, very important. So section 31, 32 we have covered. Expulsion of partner is pending. We'll take it nicely. Don't worry. So this Supreme Court judgment, Vishnu Chandra versus Chandrika Prasad, this is specifically talking about your retirement's outgoing partners. So you can read this example. No need to remember the name of the case laws, but yes, if study material is giving you such important judgments, you must give it a fair reading. It is typically talking about if any partner wants to disassociate, means if any partner wants to leave the partnership business, which was being construed, comprehends the situation that the partner wants to retire. So once you have decided to retire, it doesn't mean that the partnership business will come to an end. Simply in this case law, it was held that retirement of a partner does not necessarily leads to end of the partnership business. The expression clearly indicated that event of the retirement partnership business will not come to an end. That means if A, B, C, D, 4 partners are doing, D is retiring, A, B, C associates can still do the business. It is not necessary to dissolve the business. Liabilities of outgoing partner we have already discussed. Expulsion we'll just take up in a while. So insolvency, this is the chart I was talking about. It is talking about the same things that we have discussed in the presentation. Now this is a very important example. Death of a partner. So X was a partner in the firm and the firm ordered goods in X's lifetime, but the delivery of the good was made after X's death. So the transaction was done during X was alive and now after his death, the delivery was made. So children, can we say that the liability accrued after his death? You remember accounts, you must have done the word accruing of liability. So after his death, the liability has become accrued because the goods have now come. So law says X's estate will not be liable for this debt. Creditor can have a personal decree. Decree means he can only file a case. He can only take up an action, a suit or action can only be taken against the surviving partners. And a decree against the partnership assets in the hand of those partners. A suit for goods sold and delivered would not lie against the representatives of the deceased partner. Why? Because no debt was due in respect of the goods in X's lifetime. Have you understood, children? It is very simple, basic English he is trying to teach you. He says when X was alive, there was no liability. So after his death, anything has happened, action can be taken against the surviving partners, means those other partners who are still alive, action can be taken against them. Even the legal representative. Legal representative means if X has died, his legal representatives are also not liable for these kind of transactions where the debt did not accrue while he was alive. So here the liability accrued only after his death. Therefore, the partner who has died, his property will not be held liable for these kind of transactions. Clear, children? Have you understood why he is not held liable? Why? Because the property, the delivery was made after he has died. So now it says the liability which was getting accrued, it was not, transaction was happening during his lifetime, but the liability has got accrued after his death. So let's take an example. So on 1st July 2015, X has died. So this transaction, which was for the business, was done in the month of March 2015. But actually, the goods were delivered in October 2015. So the goods were delivered in October 2015, and there are 3 partners, A, B, C. 3 partners were there. And Mr. C died on 1st July 2015. Now the goods have come in October 2015, and this dealer, Mr. R, wants to take up an action against A, B, and C as well. Although C is not there, so he said his legal representatives, whosoever has inherited all the property of Mr. C, they should also pay me. So you have to tell me this Mr. R can take up an action against which all partners? Come on. Let me see if you have understood. So I told you the partner C has died on 1st July 2015 and the goods were delivered in October 2015. Now, can R recover the money from A, B, and C's legal representative as well? Tell me. So R was again in the retirement partner. Excellent. Dinesh, Sujal, Harshika, Singla, Kusum, Jyoti, Piyush. These are the 5-6 students who have answered just in a click of button that only A and B will be liable, and even the legal representatives of C will not be liable. Why? Because the liability accrued after his death. Very good. Good, children. So this is your section 36 and 37. Also, we have come to an end. Let's do an interesting example of many of you have answered after that. So well done. Good. Yes, you're right. Only A and B will be liable. Yes, Lakshmi, this is what we just understood in that respective case now, that if one of the partners is retiring, it will not necessarily lead to dissolution of the firm. But yes, if it is a partnership at will and we are only two partners, then if I have told you I don't want to do business, it will automatically come to an end. So that's a common sense. If there are only two partners, then obviously it will come to an end because a single person cannot be a partner. All right, Jayanti, Sameer, Ankit, Kushi, all of you have answered correctly. Alfia, Abhishek, Neha, Akshneel, Dhruv, good. Nikhil, Hirap, good. Ruchi, correct. Rahul, that's correct. Okay, now let's come here, children. Section 37 example, let's do it. A, B, and C are partners in a manufacture of machinery. A is in now three partners are there. A is entitled to 3/8 of the partnership property and profits. So what is his share of profits? 3/8 of the share he is entitled to the profits. A becomes bankrupt, whereas B and C continue the business. Now, this is your clear-cut case. One of the person has become bankrupt, insolvent, he cannot do the business. Other partners are continuing the business without paying off A's share of profits. Now, section 37 clearly becomes applicable. Why? Because without settlement of accounts, now you have not settled my accounts and come on, you're still doing the business. You tell me with your common sense, don't you think that A should be given something out of this business? Why he should be given, children? Because without settlement of accounts is the underlining line over here. So law says if without settling the accounts, the remaining partners still continue to do the business, then they are entitled to pay the share of profits to that insolvent or retiring partner. So A's estate is entitled to 3/8 of the profits made in the business from the date of bankruptcy till the final liquidation of the partnership affairs. So till the time you have not dissolved, till the time you have not liquidated, dissolved has the same meaning, means till the time you have not ended, till the time you have not closed the firm, whatever profits you are earning, you have to pay to Mr. A for the 3/8 of the share. समझ आ गया सबको? And this is where it has written. It says, where the members of the firm has died or otherwise agreed to cease. Otherwise agreed to cease means either the partner has died or has become insolvent or he has retired and the surviving partners continue to do the business without the final settlement. This word without is very important, children. If I've already settled your accounts, then section 37 is not applicable. Without the settlement of accounts is very, very important. Then the outgoing partner or his estate is entitled at the option of himself to such share of profits since he ceased to be the partner. So 3/8 of the share, whatever he was entitled, or the interest at the rate of 6% per annum. Or he will say, just give me the interest at the rate of 6% per annum. So those who were asking, ma'am, where it is written 6%, here it is written. This is the rate, 6% per annum should be paid on the amount of his share of the profits. So the partner whose account has not been settled has the right in the subsequent profits. Subsequent profits means profits which you earn after my retirement. All right. And the last section 38 is very, very simple, children. It says revocation of continuing guarantee. Revocation means coming to an end. Continuing means a continuous one. Guarantee means a surety given to someone. So you know what is the meaning of guarantee? Let us quickly take up this topic as well, and then we'll move to the MCQs. So guarantee means, for example, you purchase certain stationery stuff from the market and you said that I will pay you the money tomorrow. But that stationery guy said, I don't trust you. So you said, Harleen ma'am, can you give my guarantee? Can you assure this shopkeeper that I will definitely pay the money tomorrow? So I said, fine, I will stand as a guarantor. I will give you a guarantee. I'm giving you a surety that definitely this child will pay you the money. So this is the meaning of guarantee. So why you don't understand indemnity guarantee? Because ye humne contract of indemnity guarantee, they are part of your CA inter syllabus, but still law wants you to have an introduction about these kind of basic words. So guarantee means you are trying to give a surety that if this person tomorrow, if you will not pay to that shopkeeper guy, I will go and pay the money. So this much guarantee, this much surety I'm giving that please supply him the stationery stuff. If he's saying he will pay the money, I am giving a guarantee on his behalf. What is the meaning of guarantee? That tomorrow if you fail to pay the money, I will go and pay the money. So similarly, continue. This is a guarantee for single transaction. You went to purchase the stationery, I gave the guarantee on your behalf. Now you said, ma'am, give me a guarantee limit of rupees 1 lakh. So whenever you purchase the stationery, say for example, you purchase the stationery for 5,000, next day you purchase the stationery for 10,000, then you purchase the stationery for 25,000. So till 1 lakh limit, I have given you the guarantee. So when I am giving you the guarantee for all these transactions for 5,000, 10,000, 20,000, every time you're purchasing, so that means it is a continuous guarantee for number of transactions. So continuing guarantee, you can write down guarantee given for number of transactions. Now what happens? Law says if a firm has given any guarantee or any such kind of guarantee has been given to a firm. So say for example, a firm is doing a business and somebody is giving me a guarantee that tomorrow if this firm does not pay the money, then this Mr. C who is giving us a guarantee will pay the money. So law says whenever there is any change in the constitution of the firm, how does the change happen? If any of the partner died or by retirement or by introduction of new partner, whenever any such change happens in the firm, this guarantee will come to an end. A revocation of guarantee means then this whatever guarantee has been given to the firm for these number of transactions, it will simply come to an end. So let us just read. Section 38 says a continuing guarantee given to the firm or to a third party. So I just now explained you the stationery example. What is the meaning of guarantee? So this is kind of a guarantee given where you're telling that, okay, tomorrow if this firm will not make the payment, I will make the payment. So sometimes firm has got such kind of guarantee from outsiders or they have given the guarantee to the third parties for the transactions of the firm. Now, law says whenever such change in the constitution happen, your section 17, those who were asking, section 17 talks about your change in the constitution. How does the constitution of firm changes? When a new partner is joining, when somebody is retiring, when somebody is becoming insolvent, then the constitution of the firm changes. Then for all the future transactions, this continuing guarantee comes to an end. Simple. This is the only line that you have to remember and learn. Section 38 tells you two things. Number one, sometimes a continuing guarantee is given to a firm. Number two, whenever the firm gets change in its constitution by death, by retirement or introduction, then the continuing guarantee also comes to an end. Simple. इतना ही याद करना है एंड इट इज अ वेरी इंपॉर्टेंट क्वेश्चन 4 मार्क्स का 2 मार्क्स का छोटा सा क्वेश्चन एग्जाम में एट टाइम्स यू गेट व्हाट इज द मीनिंग ऑफ रेवोकेशन ऑफ कंटिन्यूइंग गारंटी एंड इफ यू राइट दिस मच 4 लाइन्स दैट आई जस्ट एक्सप्लेन्ड यू दैट इज सफिशिएंटली इनफ ऑलराइट so let's do the MCQs. I won't be taking any more break because otherwise your expulsion will be left. So here please start reading the MCQs, children. Actually, in the 2 hours, we have to complete everything. So that's why I don't want to leave anything. Definitely, he can give a public notice, Abdul. That's absolutely correct. Yes, Khushi, that's correct. Till the time of closing, shall they settle? Yes, Harshika, if they have not settled his accounts, then only this section 37 will become applicable. I want to take up the question paper also, section 29, 36, 37. I have certain question papers also. If we won't be able to take right now, we'll try to take up in the next class. Don't worry. So in what circumstances a partner may retire? According to the express agreement or in case of partnership at will by giving a notice, with the consent of all the partners or all of the above. So you have to send me the answers, answer number 1A or whatever the option is. Let's go to the second one. A new partner can be admitted in the firm with the consent of all the partners or special majority of partners, simple majority of partners, or with the consent of new partner only. Whose consent is required? Which of the following acts are not included in the implied authority of partner? So section 19 to 22, we have discussed implied authority of partner. Which of the following are not included in the implied authority of partners? Number one, to buy and sell the goods on account of partners, to borrow the money, to enter into partnership on behalf of the firm, to engage a lawyer to defend action against the firm. So what all is not included in the implied authority? Not all not included means which is the implied authority which is restricted. Remember, there are certain restrictions imposed in the implied authority. So which restriction is imposed on the implied authority? Can he buy and sell the goods on account? Can he borrow the money? Can he enter into partnership on behalf of the firm, or he can engage a lawyer? Which one is the restricted one? You have to answer me that. Okay, apart from this one, we have not done. Fifth one. Okay, let us see the answers for the first three first. So who is the first one to give a correct answer? All of the above. 1D is the correct answer. Manisha, Harshika, Pooja, Sujal, Parth, Simran, Aryan, Ridhi. All of you, Aryan, Ankit, Mishra, Vidhi, Jayanti, Dinesh. All of your answer is correct. So the correct answer is all of the above. Good. The second one. Who needs to give the consent? 2A is the correct answer. 2A is the correct answer. Let me find out if anyone is giving wrong. Mayur, 2B. Why are you saying 2B? I never taught you anything like say special majority. ऐसा तो कुछ है ही नहीं है special majority or simple majority. The answer is all the partners. So 2A is the correct answer for the second one. All right. So don't expect me to read the names of all of you because everyone is sending Rimhim Trivedi. That is absolutely correct. All the answers are correct. Chandan, Parth, Sumit, Jasprit. I will not read the names now, Priyanka, Lakshmi, because then you'll say, ma'am, mera naam nahi pada. So let's go ahead. So third one, all those who have answered third, C is the correct answer. It was a little tricky, so I'm glad all of you have answered it correctly. Anuja Vibhute, your answer is wrong. 3A is not the answer. 3C is the correct answer. Milan, you have also written wrong 3D. It's not correct. Now the confusion why 3D are answering because engaging a lawyer, children, there the word used was arbitrator. So the restriction is on having an arbitrator. You cannot file a case with the arbitrator, but engaging a lawyer, nobody is stopping you from doing so. The restriction on the implied authority was to enter into partnership. That is the implied authority which is restricted. Other things, anyways, the partners are allowed to do. Okay. Okay. Now let's come to the fifth one. Fourth one we are not going to do because you have not done the expulsion with me yet. If a partner commits a fraud in the conduct of business, then he shall indemnify the firm for any loss caused to it by this fraud. He is not liable to the firm. He is liable to the partners. He is liable to the third parties. So what will happen if any partner has committed a fraud in the conduct of the business? Then what is he entitled to do? What will be your answer in this respective case? No worries, Harya Verma. Aditya Kumar, that was right. Even Jyoti was wrong. 3C hai, 3D nahi hai. Karishma, Akshneel, Khushi, you're right, all of you. Simran Kaur. Okay, give me the correct answer for this one as well. I hope you have read this one. Let's go to the sixth. The partners shall carry on the business to the greatest common advantage for the welfare of the society, for the advantage of the family members, for earning personal profits. So we need to carry on the business for what purpose? Have you read the question carefully? Let's move to another one. The liability of the minor partner. The liability of the minor partner is limited to the extent of his share in the firm, his personal assets, his share in the firm and his personal assets, or he is not liable. Very good. Those who are sending correct answers. Piyush, Varun, Arnab, Jinal, Vivek, Riddhi, Ganga, all of you. All right. Thank you so much. So let me just give you the answers. So if a partner commits any fraud in the conduct of the business, what does he need to do? Yes, 5A is the correct answer. I don't know why you're giving me D as the correct answer. It's not at all correct. He shall indemnify the firm for any loss. I have been explaining you this point in today's query also, that any loss caused to the firm because of your conduct, you must indemnify the loss caused to the firm by his fraud. So you have to make good the loss. If the firm is suffering because of your actions, you need to compensate to the firm. The second one, it was very, very simple. All of you have answered it correctly. So sixth ka answer hai A part, to the greatest common advantage. I don't know why you're answering welfare of society. You have not opened the partnership. If you're doing welfare of society, then it is a charitable institution. It is not a partnership. So for the greatest common advantage, to do the business, to have a motive of earning profits. So all these things. For earning personal profits, my God, Neha Yadav, wrong answer. That means you earn personal profits. You will not be sharing the profits with the firm. Then that is wrong. Then you need to return those personal profits to the firm. Somebody was answering 6B. That is also incorrect. Many of you have answered 60. Anjali, Mohammed, Saurabh saying that's incorrect. Gopal Krishnan, 6A is correct. So that's good. So I hope we can just meet once physically in the class and I can take your written test so that you know how you have to attempt your answers. All right, no worries. Have you understood, children? Now let's move ahead. And the last one, the liability of minor partner is limited to the extent of his share in the firm. That's it, 7A. All of you have almost given this one correct. So 7A is the correct answer. Dhruv Khandelwal, 7D is wrong. You're saying he's not liable. No, he's liable till his share in the firm. I said he's not personally liable, but अपने share of firm तक तो आप liability arise होती है उसकी. All right. Now, children, let's, we have 7 minutes left. Let's complete the expulsion, or you want to do the examination paper question? Okay, no worries. We'll do the examination paper next time. Let's complete the expulsion of partner. So section 33 is the last topic for today's session, and then we'll wind up. And in the next class, we have to take up those examination questions first, and then we'll move to the registration and dissolution. All right. Thank you so much, Sandeep Kumar. These kind of humble words really mean a lot. Good. I feel really happy and glad when you write and tell me that everything is crystal clear. You have understood it nicely. So that's nice. So let's pay attention to this very interesting topic, expulsion of a partner, section 33. Now, children, expulsion is a term which is not very easily can be used for any of the partner. I told you earlier also, expulsion is a very harsh term and it is not very easy to expel anyone from the firm. You cannot throw any partner out of the firm unless and until it is exercised in good faith, unless and until they had a contract between the parties for this expulsion. So the power of expulsion must be given in the contract, means our partnership agreement must have a clause that yes, we can expel a partner. So if A, B, C are partners and we have never written in a partnership agreement that the partner can be expelled, then can you expel a partner? The answer is no. If you have not written in the partnership agreement about expulsion, then you cannot expel the partners. Therefore, there must be a contract between the partners for the power of expulsion. Point number 2. Now, here is your majority of partners. So it says power has been exercised by majority of partners. So if there are 10 partners in the firm and 9 of them says that yes, the partner can be expelled, then yes, the partner can be expelled. But if only 3 or 4 of the partners say that the partner should be expelled, then it is not possible. Majority means बहुत ज़्यादा, more than 50% of the partners should agree for the expulsion. Then only it can happen. Thank you, Surbhi, Dhairya, Nikhil. Thank you, Arnab. Thank you, children. Oh my God, Shiba Khan, I have read all your answers. See, I knew then you start saying, ma'am, my name was left. We have another class, Aditya Pal, on Saturday for this chapter, so don't worry. Komlakshi, that is what we are doing, expulsion. Thank you, Priyanka. So expulsion means a partner cannot be removed from the firm. Expel means to nikal dena kisi ko firm mein se, that we are just removing this partner from the firm. So it says, number 1, this power of expulsion must be given in the partnership agreement. It must be exercised by majority of partners. And point number 3 means it must be done in good faith. So if there are 3 partners, A, B, and C, and A and B don't like each other, they have a hatred for each other, and they don't like to sit together, and they don't talk much. So tomorrow A went to C and he said, I want to remove Mr. B. Mr. B should be expelled from the firm. Can this be done? Tell me. फटाफट से बताओ मुझे जल्दी. A, B, C, three partners. A and B don't like each other much. And A just went to Mr. C and he said that please expel Mr. B from the firm. I don't like working him and I'm not happy working with him. So he doesn't bring very nice, good food for me and or any reason, you know. So can he be expelled from the firm? Tell me. Thank you, Jyoti, Sarvesh, Manisha, Shiv Tripathi. Thank you, Riddhi. Okay, children, now answer me this. Thank you, Mansi Kumari. Shiv Tripathi, we'll take up that question. First, hold on. Answer me this one. Can Mr. A go to Mr. C and he can say that I'm not liking Mr. B. Let's expel it from the firm. Excellent. The answer is no, not at all. I like not at all, those who have written. Excellent. No, not at all. Why? Because it must be exercised in good faith. It must be for the benefit of partnership. So expulsion need a very solid reason. You cannot have a basic reason that, you know, I don't like your face, or I don't like the food that you have bought, or I don't like sitting with you, any vague reason, or your wife's had a fight in the club, that's why you are leaving the firm. So there has to be a solid reason. It must be exercised in good faith, means it must be for the benefit of the partnership. So expulsion means to remove a partner from the firm. How the partner can be removed? Expulsion means removing, nikal dena kisi ko. So it can be done. Yes, absolutely correct, Khushi Vashne. Personal reasons are not the valid reasons. It must be in good faith. Very good, Pushpa, Pooja, Kusum. Many of you have become active now. Anuja, Mayur, Sadiq. Excellent, correct. Ajit tab say majority has to agree. No, even if majority cannot agree on these personal reasons, okay? Arnab Ghosh, you're correct. Okay. So it says Varun, Jasprit, Mansi, all of you are correct, children. So it says the partner can be removed only if the power is given in the agreement. Number 2, it must be exercised by majority of partners. And number 3, it must be exercised in good faith. After that, it says the expulsion must be in the interest of partnership. So you all understood it should not be in the personal nature. It should be in the interest of partnership. So your personal fights, quarrels cannot lead to an expulsion. Partner to be expelled must be given a notice and an opportunity of being heard. Now, this is something very, very interesting. So, do you think that if I want to throw someone out of the firm, I will just get up and I will tell him that, okay, fine, leave the firm? Law says, no, you can't be that harsh. You have to give him a notice. A notice in writing has to be given, and he must be given an opportunity of being heard. Means you should ask him to come and represent himself. You should ask him the reason why this happened. So you have to hear to that person. You cannot just expel the person from the firm just like that. So these are the very important points, children. Number 1, you have to remember expulsion can happen only with the majority of the partners. So if there are 10 partners, 8 of them have agreed, yes, the partner can be expelled. So do you think that if it is in good faith, okay, number 2, we have understand it is not of personal nature and it is in the good faith. But will you just simply go to Mr. A and you will tell him that, okay, fine, leave the firm? No. What will you do then? You will send a notice in writing to Mr. A that we have thought of expelling you. Please come and represent yourself. So he must be given an opportunity of being heard. He should be given an opportunity to come and Hindi में बोलते हैं ना अपनी सफाई पेश करना. So उसको एक मौका दिया जाएगा that you should come and present yourself that what happened and why these are the reasons which have come up for your expulsion. So without serving a notice, if you are doing, then it will be null and void. Any expulsion which happens without serving a notice, it is not valid. It cannot be done. You have to give a notice, and an opportunity of being heard should be given to the partner who is getting expelled from the firm. Let us do the example from the study material. So many things we had to cover up in this session. So let's quickly take up the example of expulsion because I don't want to leave any single thing. Yes. So A, B, C are partners in the partnership firm and they were carrying on the business for past several years. So they were very happy and doing the business. Now what happens? Spouses. Spouses means wives. So A and B spouses, they had a fight in the ladies club on their personal issue, and A's wife was hurt badly. Now see, such a personal kind of story they have created. So that's why I really enjoy teaching expulsion. So because it has a little personal, emotional touch to this examples. So it says now what happened, they were very good partners, A and B and C, and now their spouses had a fight in the ladies club on their personal issue, not even business issue. And A's wife was badly hurt. A got very angry and he convinced C that let's expel B from their firm. So C went to, he convinced C, he told Mr. C, listen, my wife is really very upset and, we should throw him out. Expel means we should remove Mr. B from a partnership. And B was expelled from the firm without any notice. अभी मैंने आपको क्या बताया? It is very important to give a notice and of opportunity of being heard. First of all, the reason ही valid नहीं है. It is a personal reason. He cannot expel him. The expulsion has to be done in good faith. Second thing, you're doing it without notice. Therefore, it says, can you expel such a partner? The answer is no. Expulsion can never happen without serving a notice in writing. Now, how you have to represent the answer, that is also your study material is telling you. It says, number one, you have to write the expulsion maybe happen by majority of the partners and it should be in good faith. Okay, we have defined the section. Number two, it must be given in the contract. It must be exercised by majority. So he is simply defining what is written under section 33. First, you have to define this. Now, if all these conditions are present, then the expulsion is not deemed to be in bona fide interest. So it says if all these conditions are not present, if these are not there, then it will not be in the bona fide interest, means it will not be in the good interest. It will not be in the good faith. It will not be in the good interest. Bona fide means in the good interest. So now he said, so number one, he gave you the concern provisions. Number two, he gave you the facts of the cases. Number three, he tells you, according to the test of good faith, expulsion of partner B is not valid because there is no good faith, that you're not doing it at good faith. And also remember that the notice has to be served in order to expel any of the partners. So children, I hope we have done so number of sections today. I understand it was too much of information, but when you write, ma'am, thank you so much. We have understood everything. That's great. Bhomik has a query for us. Okay, you are the best at solving my problem. So thank you so much, Bhomik. I am really glad to read that. It's all clear. Kushi is saying, Sandeep, thank you so much. Something against law, Sandeep Kumar. Like if he did, yes, something against law, if something he is doing any criminal act, then obviously he can be expelled without even giving any notice. You cannot do any crime. Illegal activities are not allowed in the business. Okay. So, ma'am, is there any age limit for a partner? So, Kamalakshi, there is no age limit for the partner, but there are certain number of members you cannot exceed the partnership. A can't be expelled. That's definitely correct. Shubham Kumar. Thank you so much, Shubham Kumar. It really means a lot. Sarvesh, ma'am, should the notice be in writing? Yes, you have to inform the notice. Now, notice not compulsorily be in writing. You can at least inform. So without giving notice means you have not even informed him. So it can be maybe by oral information, but notice has to be given. Information has to reach him. All right. That's nice, Shubham. I am glad you understood the words in Hindi in between well. So that's also fine. Yes, Neha Yadav, an opportunity of hearing must be given. That's absolutely correct. Majority can be exercised for entering a new partner. No, Abdul, that's incorrect. In entering a new partner, we have discussed all the partners' consent is important. Dipanshi, you are asking something related to an example. Just remind us, we will take up this respective example from the study material in the next class. All right. Thank you, Jasprit. Thank you, Chandan, Dinesh. Thank you, Samir Singh. So I cannot find any more queries right now. Gopal Krishnan. So Dipanshi, where it was talking about the personal profits, it is simply telling you that if any personal profits you have made, if you're hiding from the firm, then you need to return those profits. It's not just about the amount. It is simply telling you that if any personal profits you have earned, you're part of the firm, you're breaking the trust and confidence, then you need to return those profits to the business. Thank you, Ajit. All right. Thank you, Priyanka. Thank you so much, children. We can write, yes, Parth, you can definitely write. And I have told you the 3 paragraphs in this presentation today. When I'll upload this presentation, you can see we have understood how to write the answers of the case law also. And in those 3 paragraphs concern provision, facts of the case, and conclusion, you can present your answers. Don't worry, Lakshmi, section 29, I had this mock test paper, which I really wanted to share with all of you. So don't worry at all. We will definitely try to take up in the next session. See, I will show it to you. So this is the paper that I want to do with you. Here we have all the section 36, section 37, which I want to cover with you, 6 marks questions. So next time, children, all of you come prepared with all these sections so that you send me answers well in advance when I ask you the questions. All right. All right. Thank you, students. And thank you for sending so many good wishes. I also really wish good for you and really want that you all should clear your CA foundation with flying colors. But the only thing I request you is keep revising your context. So next session, we'll begin with the solving the question papers first. I'll be asking you questions. So it'll be kind of test of yours. And then we'll wind up with the registration and dissolution of the form. All right. Thank you, children. Thank you so much. Goodbye.